little over 12,000 crores in May, just a shade under the April figure. CNBC says, of course, the domestic fund flow is stabilizing at lower levels. Sunil Subramaniam, CEO of Sundaram Mutual Fund, is now with us with his take. Sunil, hi, good morning. Thanks a lot for joining us. Of course, we are nowhere near the highs that we had seen, but you reckon that retail investors are sort of buying this volatility, putting more money?
Absolutely, because one of the things you see is the component of SIP flows in the total flows has been steadily going up, for the last 2-3 years. So SIPs are not something that investors shift out based on how the current outlook changes. Most SIPs, we see that about 65% of SIPs are booked by investors for 5 years or plus. So you won't go in a hurry, take a call based on market volatility. On the contrary, I think the distribution fraternity has been doing a very good job of explaining to investors that this volatility actually helps improve their SIP returns. So I think that education, both from the industry side through the mutual funds IEA campaign, plus the fact that distributors are telling investors that the long-term India story is very good. And buy low, sell high, SIP works brilliantly for you because the volatility means you buy more units at lesser price and hence your ultimate returns will be very good. So I think it's a good job of education. Investors are also becoming more savvy. And I think final point is that I think investors are actually investing into the economy. They are beginning to look at it in that way is what we see. And they're not so much concerned by short-term, news flows and volatilities. At least that's the trend that we are seeing at our counters. And there was a little bit of a jhatka in terms of the last quarter when the LTCC tax was announced. But once that people understood what that meant, I think come April onwards, the flows have stabilized.
Okay, Sunil, hi, good morning. I wanted your thoughts on the breakup. We've seen a mid-cap meltdown of sorts over the last 6 to 8 months. How have the flows been between large-cap funds and small and mid-cap schemes? Have you seen a reduction there?
Not really. See, the ratio has always been 65% towards large cap and diversified category, 20% towards mid and small caps, and about 5 to 10% towards balanced and equity hybrid categories. I think that ratio has remained the same. There hasn't been much altering. Like I said, the reason for that is not that people are thinking mid-cap, because when they go to an advisor and he allocates that portfolio, he does it this way. So it's not that an investor purely comes and says, I'm choosing mid-cap. He's choosing an asset allocation pool from which 60-65% is large cap, 20-25% is mid cap, and 5% is sectoral and others. So I think that pool remains intact, and in fact, if you look at it, like I just mentioned, the advisors are telling them it is the mid cap ones which are ultimately going to deliver a better return. So I don't see any kind of differentiation in this volatility that investors are switching in the SIP part to large caps. As far as concerned, yes, there is that concern when volatility is there are a lot more questions from investors on the mid-cap suffering. So my existing mid-cap portfolio is already suffering. What do I do? Do I come and top up? So people do ask whether they would like to average or top up. So again, the sign of a healthy outlook towards the long-term Indian economy, I would say.
Well, I take your point. I was just looking at some returns yesterday. Average, I think 6 months, if you look at it, most mid-cap funds are down between 5 to maybe 7-8%. But if you look at 3 or 5 year returns, then we've got some phenomenal numbers to take in. But the other question, Mr. Subramaniam, is the churn that's been going on as you all comply with SEBI's guidelines. Every time I speak to a MF CEO, we're told that we're not contributing to market volatility. Most of that is over. Would you concur? All the adjustments that had to happen in schemes, even mid-cap and small-cap schemes, is it all over?
I think this month should see the last fag end of that. I think by end of June, it will be like 100% over. There will be some trail here, and I'll tell you the reason for that. There is a lot of large-cap funds which had mid-cap stocks and was selling it into the market, and then they find that the market correction means that it's not conducive, will probably delay their action for a few more days or weeks to actually complete it. So I'm just saying there's a tail end left probably, and this month should see a complete. So from July 1, I would say you would not have an impact of the regulations on the market.
Okay, so just coming back to the earlier point about the mid caps and small caps, because we keep getting a lot of queries about the mid cap fall and what one should be doing. For people who have SIPs going in the mid cap funds, the diversified, even the small cap funds, for example, what should investors be doing with sort of stocks that have corrected in double digits in their funds?
See, I think the fund managers will not be churning their portfolios because of these market corrections. The reason for that, I'll tell you, is that most fund managers have a 5-year outlook when I pick a mid-cap stock. And the reason they're picking the stock is because they've done a cash flow projection for the next 5 years based on the company's potential. So the correction here is more the sentimental correction given the way the news flows are impacting various sectors, but the long-term future profit generating potential of that company has not been impacted. So the fund manager will actually be averaging. So any fresh flows that he gets through SIPs into the mid-cap fund, he will actually go and buy those stocks more. But the point is, investors shouldn't go and buy those stocks on their own for the simple reason, because the ones which correct more are the ones which have a lot of flatulence, like which have gone up to a lot of hype. And they will correct more, so investors will be tempted saying, hey, this has fallen 80%, this has fallen 100%, let me buy that. Whereas the fund manager may be buying only the one which has fallen 20-25% because the basic fundamentals of the company are good. And it makes better sense to buy a stock which has corrected only 20% on average rather than 80% which has went up on sentiment and momentum. So I think that discerning capacity individual investors will not have because their pockets are not deep enough and their heart rate will not tolerate this. So I think the best is that mid-cap funds are actually doing the averaging like you said. And we are picking up the good quality ones which we have already picked up, and we will be topping them up during the course of these corrections. And these kind of corrections are in fact the best value add to a fund manager because the long-term study of the stock comes into play at this point. So I would actually say that investors, if they can, they should marginally increase their allocations to mid and small cap fund SIPs. But bear in mind that they don't look it back at more than, say, 5 years should be the minimum they should look at from a waiting period perspective.
Okay, Sunil, thanks a lot for your time today. As the market heard you, perhaps the mid-cap index is almost in the green already, and this